referred to a collective margin call on the United States in which foreign creditors sought to reduce their exposure to the deteriorating creditworthiness of U.S. borrowers. This paper argues that the carry trade should instead be viewed in the broader context of global credit conditions. What does all this mean?
It means we're all...
The rating downgrade of the United States reflects the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and the erosion of governance relative to AA and AAA rated peers over the last 2 decades that has manifested in repeated debt limit standoffs and last-minute resolutions.
If you know the reversals occur 60% of the time, you know if you get a trading algorithm, you should be able to figure out how to make money with that.
Hello and welcome to Crypto Street, where we bring you the latest and most intriguing stories from the world of cryptocurrencies. Now, let's begin our enlightening discussion with Michael Gayed.
Credit event is just another way of saying massive VIX spike, which is another way of saying potentially the end of the bear market, which I know sounds crazy, that I still think we are in, right? Because that's how bear markets tend to end, with a bang, not with what we saw last year. Okay, so I loudly yelled in October of last year, conditions favored a melt up. The thesis back then was yields were rising so fast that you couldn't bet on that continuing, so you might as well bet on stocks. And I was pretty much right on that. December, I interrupted the melt up argument and said, I think we're at the risk of an imminent crash. You didn't have a crash in December, but you had the 5th worst December in history going back to the 1920s. Then after the first week of January, I said to you, as you interviewed me back then, it's a pre-election year. Pre-election years are historically among the strongest. It's a melt-up environment, but that there's a credit event out there, right? And I said that because people seemingly have lost their damn minds and forgot that interest rates act with a lag. We went through the fastest rate hike cycle in history. Interest rates don't impact the economy right away. They impact the economy with a delay, and not just the domestic economy, but global economies. Now, in April, I said, 3rd week of April, I believed a correction would start. Stock market didn't correct, although 7 out of 10 sectors went down heavily. AI mania took over. Narrative followed price. NVIDIA went insane, and apparently so did I. Talking about NVIDIA on Twitter. And by the way, my own strategy is turn risk on, even though I loudly said, be very careful. This is not healthy, right? I put a whole tweet that's pinned where I said, now I think we're actually pretty close to a credit event. Okay. Now, credit event means spreads widening. It means default risk getting repriced. It means fear getting refreshed into the market. It's not one of those things where I'm trying to be a perma-bear, but there's all kinds of evidence that shows that nobody's prepared for what could be to come. And if Japan ends up being the catalyst, there could be some really nasty margin call unwinds that take place.
Don't forget to join us as we continue to explore the unfolding events. Now let's look at recent developments in the cryptocurrency market. Then we turn to economist Steve Hanke. White House Yellen slam Fitch's U.S. rating downgrade. Biden officials call it bizarre and baseless. U.S. District Judge rejects approach in SEC v. Ripple ruling on XRP. ETF analysts spot Bitcoin. ETF approval. Odds at 65% amid pressure from BlackRock. Japanese yen hits 20-year low against U.S. dollar. BOJ maintains loose policy amid inflation pressures. A Hong Kong-based Web3 startup has raised an oversubscribed pre-seed round to build user data infrastructure for a decentralized future. WorldCoin to extend ID verification system to businesses and governments. KuCoin suspends Bitcoin and Litecoin mining pools.
Everybody's talking about Bidenomics. Biden is running his mouth off, the president of the United States, about all the wonderful things that Bidenomics has generated. Well, one thing that's generated is a downgrade in our debt. How about that? These are the technocrats. It's a bipartisan, technocratic part of the U.S. Congress, Congressional Budget Office is. And they do the sharp pencil work on the budget. And what you see by looking at their latest report is that the debt trajectory in the United States it's just not sustainable. Right now, the United States debt to GDP ratio is 98%. It's projected to go up to 115% in 10 years by 2033. And if we go out 30 years to 2053, they have it going up to 181% of GDP. So those are big numbers, but to get your head around the thing, I think the easiest way is to look at the interest expense on that debt as a percent of the budget. And right now it's 10.3% and going up. By 2033, it'll be 14.8%, almost 15%. And in 30 years, if things keep going the way they're going, interest expenditures would be 23% of the total budget. Now that's expenditures for nothing. I mean, they're just interest charges. So this irresponsible government spending has created these deficits, and the deficits, of course, pile up, more and more debt, and that has to be financed with more and more interest charges being made against the taxpayer.
What's happening in the crypto market? Let's take a quick look at those technical analysis. Bitcoin's price has been trapped within a narrow range, hovering around $29,500 on August 2nd. The flat market trend emerged a week ago, keeping the price fluctuating between $28,850 and $29,660. Last week, Bitcoin experienced a 4% drop below $30,000 due to the Federal Reserve's interest rate hike, which historically has been bearish for cryptocurrencies. However, Wall Street economists anticipate a rate hike pause in September, potentially limiting Bitcoin's downside. On the other hand, regulatory uncertainties around Binance and recent DeFi exploits have hindered Bitcoin's ability to break above the psychological resistance at $30,000. The market sentiment remains supportive, but institutional interest has decreased recently, with investors taking profits. From a technical perspective, if Bitcoin manages to break above $30,000, it could rally toward $31,500 in August. However, breaking below key support levels might lead to a potential crash towards $27,000. Traders and investors are closely watching for further signals to navigate the current market landscape.
We have keywords that are contained in those articles, and the computer finds those words. And some of those words are bearish and some are bullish. And when the computer gets done with its text mining, we can determine whether that article is bullish or bearish on gold. And that's how you get the sentiment score. What does that tell me to do? That tells me that the price of gold will increase. Once the extreme bearishness is in the market, it will revert. And the bearishness will come out of the market when the sentiment, and when it comes out of the sentiment, the price of gold goes up. So yes, the track record now, it's a little over 60%. When we reach extremes, either bullish or bearish, we know with a 60% probability that not only will the sentiment reverse, but more importantly, 60% of the time, or a little more, the price of gold will go in the opposite direction.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.